there's a lot of parallels to oil and to Bitcoin, sort of this like energy commodity. Obviously, a lot of things different. It's a lot easier to move Bitcoin around than it is to move millions of barrels of oil. But it is really an energy commodity, and we've created essentially the same de facto monopoly of the ins and outs of the Bitcoin system being 95% plus denominated in dollar pairs, whether they're stable coins or just USD, but mostly stable coins.
Podcaster Preston Pysh recently interviewed Mark Goodwin about Goodwin's book, The Bitcoin Dollar. In the interview, Mark Goodwin shared insights from his book and discussed the implications of covert dollarization, among other topics. In his explanation of the Bitcoin dollar, Mark Goodwin compares it to the petrodollar scheme. There was a worldwide demand for dollars in the 1970s, when the US and Saudi Arabia established a system where oil could only be sold in US dollars. Similarly, businesses that keep Bitcoin in the US might also be obliged to hold US dollars, given Bitcoin is mostly traded in US dollar pairs. As a result, the value of Bitcoin increases due to an artificial demand for dollars. Unlike commodities like oil or gold, the supply of Bitcoin is unique in that it remains unaffected by fluctuations in demand. Bitcoin's fixed supply ensures that its value is driven primarily by market sentiment and investor behavior rather than changes in production or extraction. The limited supply coupled with speculative trading can lead to rapid price swings, reflecting both the speculative nature of its market and the evolving perceptions of its value. Watch clips from the interview for further insights into Mark Goodwin's conversation with Preston Pysh. Please like this video, subscribe to the channel, and turn on post notifications for more content. Enjoy the video.
What does he mean by a Bitcoin dollar? Explain this as simply as possible.
Yeah, totally. I think, I've done this quite a bit now. I think the easiest way just to sort of establish the analogy is, Bitcoin dollar a la petrodollar. So it's probably the easiest analog. And the idea is much like the petrodollar. Well, let's explain the petrodollar, right? So, Nixon shock, early 70s, the US decides to cut from, a gold-backed standard where you could actually take your reserve notes, go to a bank and get gold back. Legally, they had to do that. So you could argue, of course, right, the dollar was backed by gold. When exactly that, mechanism sort of broke down, from a market standpoint, is up for debate. But the actual Nixon shock happened in 71, and the U.S., officially removes itself from a gold standard. And, it's a very interesting time, and everyone is sort of like, okay, well, here's the end of the dollar. There's going to be de-dollarization, all these things. And actually, what happened was we saw military presence from the United States, really significantly ramp up in the Middle East and in Saudi Arabia. And we saw an establishment with the Saudi government of this, petrodollar system in which, for exchange for military defense, they would only allow the sale of petrol, of oil, to be denominated in dollars. Right before the Bitcoin relative issuance goes below the rate of the dollar and gold, we see this really funky thing happen in the oil markets. And that's when I would say was sort of the death of the petrodollar, and the creation of the Bitcoin dollar system is in that market mechanism. And so obviously Bitcoin crashed then as well, went down to like $3,300, but it basically 20x'd within the next year, within the next 12 months. Pretty absurd for a commodity. So there's a lot of parallels to oil and to Bitcoin, sort of this like energy commodity. Obviously, a lot of things different. It's a lot easier to move Bitcoin around than it is to move millions of barrels of oil. But it is really an energy commodity, and we've created essentially the same de facto monopoly of the ins and outs of the Bitcoin system being 95% plus denominated in dollar pairs, whether they're stable coins or just USD, but mostly stable coins. We're seeing right now, an adoption or at least an interest in adopting, new capital requirements for the United States system, like a Basel III, that would actually have a significant influence in this sort of this axiom specifically of Bitcoin appreciating and needing dollars on the books. So if Bitcoin is determined as a liability and not really an asset in terms of balance, on your balance sheet, then you need to offset Bitcoin appreciating with dollars, as this capital requirement, axiom, basically to appease, hey, there's a lot of risk in having Bitcoin. So if you want to play with Bitcoin, you want to have it on your books, well, you better hold a lot of dollars too. And so it creates this artificial demand, and it creates this, Bitcoin is this really special thing, right? Because it's demand inelastic. So no matter how much demand is there for Bitcoin, there's a set amount of Bitcoin issued every 10 minutes. It doesn't matter how many people want it. So it's kind of the first commodity ever to really establish that. Whereas, oil or gold or silver, these previous sort of energy standards, if there's a huge demand spike for gold, gold 4x's in price, you can send 3 more people down the mine, go get a bunch more gold. There's a lot more supply that hits the market, and then demand goes down. Bitcoin doesn't care. It's completely demand agnostic.
According to Mark Goodwin, a Bitcoin dollar play exists in which Bitcoin's limited supply can absorb the vast debt bubble of US dollars and dollar-denominated debt. The value of Bitcoin may increase significantly if US regulations force businesses that own Bitcoin to retain dollars as well. Citing Zappo's sophisticated key management system, he emphasized the significance of stringent security measures. Goodwin notes that a significant quantity of Bitcoin entered the US regulatory framework in 2019 when Zappo sold its custody business to Coinbase. This is advancing the Bitcoin dollar system, along with stablecoins and ETFs, fueling demand for Bitcoin and US Treasury bonds. With so much liquid Bitcoin currently kept within the system, Goodwin feels this system has developed tremendously and anticipates more expansion. Let's go back to the interview and watch more clips to gain insights from Mark Goodwin.
We've created this huge debt bubble of dollars, dollar-denominated debt, and now we have basically this vacuum of Bitcoin that can suck all up, all of this debt, this huge bubble, and right into this demand inelastic asset. And if we create a regulatory environment that requires companies that hold in the United States, a lot of Bitcoin to hold dollars, now we've created this mechanism for Bitcoin to appreciate, substantially and require trillions of dollars of dollars to be held by these institutions that hold Bitcoin. And so that's part of this Bitcoin dollar play that I think is really important with a Zappo. And that's kind of why we were looking at this piece. I really wrote the Bitcoin dollar as sort of just a mechanism. It was sort of a look at, okay, well, this is kind of a complicated thing. A lot of people don't necessarily know how interest rates work or the treasury system works. And I didn't really know, until I was researching the book and kind of getting into it. This knowledge is sort of obfuscated for a reason, so that we don't know how it works.
That's for sure.
Yeah, totally. And so you look at a Zappo, and they kind of built, the two things that you really need to create this Bitcoin dollar system. One being obviously extreme security. You want to hold these keys. You want to inflate, bits and bytes to be worth trillions and trillions of dollars, which is where we think this is going as Bitcoiners. Well, you damn well better be sure that you can secure those keys really well. And Zappo really built that. They did really absurd things. As I mentioned, putting stuff in space, digging it into the ground. They even did stuff where they, created these pulse, like fingerprint scanners that have a pulse reader on them, so that you can't just cut off someone's hand and put it on the thing to get someone's keys. It can tell if the hand's been cut off, right? Like all of these just super, to build a system that holds trillions of dollars, you need to have this highly secure level of key management. And Zappo built that. And it came out of, it wasn't really what they were trying to do. It came out of just, I sold Bitcoin as this great thing to guys like Peter Thiel and Reid Hoffman. And then they wanted to buy millions of dollars of it. And then it, grows thousands of percent. Now it's worth billions, and it kind of came out of this just necessity of his friends saying, hey, keep these things safe for me. So you have to have that super high security. And then also you need to have, again, this regulatory environment, this capital requirement, and the Bitcoins be within the United States. That's obviously an essential part of this regulation play. And of course, Zappo sold its custody service to Coinbase in 2019. including Grayscale, including just an absurd amount of Bitcoin. I think something like 514,000 Bitcoin, I think, were transferred to the United States from Gibraltar back into the regulatory regime of the United States via the sale. Grayscale specifically did like 225,000 Bitcoin. It was like 2.7 billion at the time. It was the largest cryptocurrency transaction at the time, all bringing it back to the United States from being held, out of the regulatory regime of the U.S. So Zappa really has kind of created the Bitcoin dollar system. Obviously, they don't affect regulations specifically, and I think stablecoins being this huge demand for U.S. Treasuries and this custody, this just unbelievable, extreme security measures, being built up by Zappo. Here we are. So this Bitcoin dollar system that kind of became as sort of this idea that I had in 2021, the first time I wrote about it. Now, we've seen this, basically appreciate into, something that holds, 5% of all liquid Bitcoin is like kind of within this Bitcoin dollar system very, very directly. So it's very interesting the way that this is developed. I think the ETFs are a huge game changer for Bitcoin.
Ethereum's next move is being eagerly watched by cryptocurrency traders and investors who think it will greatly impact Ether and Bitcoin. Some traders believe Ether's price may exceed $2,800 before a recovery starts. One trader using the moniker Crypto Wealth believes that Ether may drop as low as $2,700 before a complete turnaround happens. According to Poseidon, another anonymous trader, Ether might test the weekly demand at $2,500, $2,700, and sweep the $2,800 lows. Since it may influence Ether's price trajectory in the near future, this prospective decline is seen as a critical support level. But Ether's present fluctuating range also permits a possible short-term recovery, according to Van de Poppe. Ether may see a sharp price increase if it rotates back up from its current position, which would be encouraging for traders. This follows a week of inflows and outflows for spot Ethereum ETFs, with net withdrawals of $169.4 million from July 29th to August 2nd, per Farside Statistics. The volatility of ETFs emphasizes the unpredictability of Ether's value. Spot Ether exchange-traded funds have the potential to draw substantial assets under management, with the head of investment research at Sygnum Bank, Catalin Tischhauser, projecting that these funds may reach $10 billion in their first year of trading. This demonstrates the increasing attention paid to Ether and its possible effects on the cryptocurrency industry. Traders are carefully monitoring Ether's movements in anticipation of a significant development that could affect the entire market, including Bitcoin. We're keeping a close eye on Ether's price because any upswing or downswing might have a big impact on the cryptocurrency market as a whole. As we conclude, what are your thoughts on this interview? Do you prefer the Bitcoin dollar over the petrodollar? Please drop your thoughts in the comments below, share this video, and hit your thumbs on the like button. Thanks for watching. Don't forget to subscribe.